Good morning, friends. This is the 7 a.m. update uh, for 4th of Feb 2020. Now, yesterday I had given you a couple of scenarios, which is that I am looking for gap ups or gap downs on the Nifty, Bank Nifty, etc., to take the other side. Right now, SGX is up about 50 odd points. It's above 11,750, and the Brent crude is now down to 54. So, like I said, that I am not finding great amounts of bearishness. So, uh, what you want to do is you need to find whether there is follow through on the upside or there isn't. Overall, what you would like to do is to first try to sell into this sort of a gap up and come back for a target of about 11,700. Similarly, if you sell around say 11,750, 760, keep a 11 800 type of a stop. Chances are that the market will fail out there a couple of times before uh, it, it takes that zone out if it has to. So today we open up. So obviously, by doing a gap up, you are not going to form a low of the day. So the odds of a high getting formed in the first half an hour, 45 minutes are fairly high. But we need confirmation, we need a retest, and kind of confirm that at higher levels there is selling and the market does not intend to go further. Although the market is not since yesterday looking very weak, but it will have its swings. So the sense is that the consumer type stocks will continue to move up, and there'll be other stocks like NBFC, etc., which will move lower. So that way, even PSU banks look fairly weak. On the Bank Nifty, if you open say 200, 250 points higher, again keep a stop say around 30, 500 thereabouts, 500 to 600, and then see if you are able to get traction on the downside. Basically, what I expect to see is that we get a gap up and then it will be a day of narrow range moves. The amplitude of the total day, which is high minus low, may not be very high. So, given that, you will have to be very alert and will have to do things on both sides. So, do not sell the gap up in the first 5 minutes. Wait for what the market is trying to tell you, that does it need to move higher, or does it just plan to do a retest and then give up these early morning gains? So today will be a little more tricky than yesterday. Yesterday was simple because you had short strapped on one side. Today may not be easy, but it is critical to see what happens today. Does the market reinforce its bearishness, or as we can see, Asia is up, coronavirus is kind of going into the background? So, sometimes these sort of gap ups can have follow through. The only way we'll know is if we wait enough and then try to act. The market is still short, and you know it is not as weak. Like yesterday, I said that we don't have good reasons to make fresh lows below 11,600. So that way, it is possible that the market surprises people. So don't assume that the gap up will get sold into. Remember what I said yesterday about the budget, that you know it hasn't done any sort of structural damage. So people need to remember that today you may have to play on both sides, and there could be follow up after the gap. So wait for the gap to fail before you act. And having said all of this, I think slowly people will get back into those insurance and asset management type of stocks, because the savings habit does not go away in a hurry. So, how many people will take the new plan on taxes? May not be very many, and people will not just give up insurance, etc., for no reason. So, my sense is that the insurance stocks, the asset management stocks, slowly from lower levels are going to recover. So, what I want to see, you have your gap up and then you are waiting. I see the first, the bear coming in and trying to hammer the market. If he cannot hammer the market beyond a certain point, then I am willing to take the upside also. So it all depends how you open and what happens post the open. So difficult to say what is likely, but I am ready to get surprised today. So be on your feet instead of just trying to assume one scenario or the other. Somewhere, the market is short, and it's a consensus that we cannot go up. So that sort of consensus, um, has the potential of surprising you. So what I am doing these days is I am working with 66% of my regular volume, because sometimes these sort of markets, they have large swings, and your risk reward tends to get out of whack. So try to keep your risk control going. That should be it for right now. We'll try to do a midday update. Take care. Good luck in your trades, and consult your financial advisor before taking any action.